If there was ever a moment for the asset management industry to come together to rethink our collective purpose and position in society, it is now. Why? Well, let me begin by winding the clock back briefly to the beginning of 2020, pre-COVID-19. The global asset management industry had just ended another successful year in which global AUM had increased by 15% to almost $90 trillion, and operating margins remained healthy at 34%. However, during 2019, we were already developing a hypothesis that the industry's good times were starting to end due to a combination of cyclical factors and structural shifts, which included the shifting responsibility for long-term savings towards the individual, value for money being questioned by stakeholders, a structural downward shift in fees across passive and active products, traditional active management being replaced by smart beta and factor investing, technology reshaping distribution and enhancing investment decision-making, an increasing importance placed on the non-financial outcomes of investment decisions. Each structural shift is individually powerful, but collectively they were driving the industry to an inflection point. We were concerned that many asset managers weren't making the most of the remaining good times by investing in technology and innovation to stay ahead of these emerging trends. At that time, of course, we had no idea a health pandemic would accelerate this change. Although we are here focusing on the impact of our industry, the human tragedy of this health pandemic is never far away from our minds. COVID-19 has created a profound change in human behavior. People worldwide are rethinking the way they live, work, travel, shop, and socialize. It has sparked a re-evaluation of many assumptions about the global economy. Asset owners' and investors' psychology is different today. Many of the structural shifts we have identified have been accelerated. We won't come out of this crisis the way we went in. From an asset management perspective, we have learned that the industry can move to remote working quite seamlessly, whilst maintaining operational resilience and continuing to generate positive net new asset flows. Institutional, wealth and retail clients have adopted digital distribution channels faster than we ever imagined. Somewhat surprisingly, the virtual environment has increased clients' accessibility, although building trust in new relationships is proving more difficult. The market volatility we experienced in late March, early April created fund liquidity and asset valuation challenges, which continue to reverberate around the industry. US money market funds had the same issues as those experienced in 2008, which once again required financial institutions and the US Treasury to inject significant capital. More positively, ETFs passed the test with flying colours, providing a price discovery mechanism when underlying markets were suspended. ESG funds have outperformed the peer group over this period and have attracted record inflows in both active and passive products. Many asset managers delivered strong half-year results, capitalising on positive asset flows, a strong market recovery and lower costs. For an industry that is not known for its speed of change, it has responded well. So what happens next? The industry's performance over the last 6 months has been underpinned by an unprecedented monetary stimulus, driving markets higher and creating a divergence from fundamentals. It is quite possible that this will be a W-shaped recovery, and that we are currently in the middle of the W. There is a potential for the second dip to be deeper than the first, and the road to recovery could be much longer. This would result in a decline in assets, revenues, and profitability. So given that outlook, how should asset managers respond? Although there is no one-size-fits-all when it comes to strategy, we believe CEOs should be replanning the next 5 years by incorporating some of the following 6 components and embedding the positive changes accelerated by COVID-19. Firstly, reorienting the business around the client to enable the move from product provider to solutions partner. It is becoming clearer that investors from all client segments want a transparent investment approach tailored to their financial needs and ESG beliefs. Secondly, accelerating the digital transformation of distribution, focusing on enhancing the virtual sales force, developing trust in a remote world, evolving digital marketing, and increasing engagement with asset owners and intermediaries through digital education, advice, and analysis. Thirdly, reimagining the investment proposition. The process for generating insights is changing. The volume and growth of data is creating significant opportunities for those who can leverage analytics and machine learning techniques to process and analyze it, streamlining the investment research process and augmenting the portfolio manager. Fourthly, maximizing the pockets of asset growth that will remain, particularly ESG investing, private markets, and China. Fifthly, transforming the business model. The ability of asset managers to develop and integrate a data and technology architecture that underpins these areas will be a source of competitive advantage over the next few years. This architecture needs to integrate mature third-party platforms, fintech platforms, and in-house developed applications. Migration to the cloud, combined with a greater use of APIs, will create greater connectivity to a wider ecosystem. COVID-19 has given us the opportunity to rethink the future of work. In-person interactions with clients and between colleagues can be reduced. Asset managers are already planning for a third of employees to always be working remotely. Many are rethinking the purpose of physical office spaces. It also gives us the opportunity to rethink who, how, and where talent is recruited, and how a more diverse team is retained. However, maintaining a strong culture in this new environment is clearly the next challenge. Strategic cost transformation is critical to fund the investments required to create a scalable and competitive platform. In the past, the industry has typically taken a tactical approach to cost management. However, given the magnitude of the changes the industry is facing, we believe a more strategic approach is required, defining where to play and how to win before optimizing the remaining processes through intelligent automation technologies. And lastly, mergers and acquisitions. Many asset managers have struggled to deliver substantial organic growth over the last 10 years. As the environment becomes more difficult, asset managers should consider acquisitions and add new capabilities. Increasing geographical reach, increasing scale, or access to new technologies. Strategic partnerships, particularly focused on distribution, will become another source of a competitive advantage. Looking beyond financial services into other industries, for example, technology, communications, or healthcare, will create access to new client segments. In summary, COVID-19 will accelerate some of the structural shifts we were previously experiencing. Government and central banks' response are going to drive the asset management industry towards an inflection point. Asset and revenue growth will be limited. Winning firms will adopt components of a multi-track growth strategy, which will be funded by strategic cost transformation and enabled by technology. This will require asset managers to manage an unprecedented level of simultaneous, multidimensional change. But what about the longer term? How will we use this moment as a trigger to reframe the asset management industry, to emerge better and stronger with a renewed purpose? At EY, we believe the long-term value an industry creates should be measured through the lenses of talent, clients, society, and financials. People are at the heart of this business, and the industry needs to aspire to set the gold standard for talent management, developing a diverse resource pool, an inclusive and equality-driven culture, and remuneration structures that are centered on doing the right thing for all stakeholders. Clients are increasingly questioning the value for money delivered by the industry. Asset managers must ensure maximum transparency with respect to exercising their fiduciary responsibilities. We need to build a better framework for measuring client perceptions of value and outcomes. We must communicate openly and honestly. Trust will be built by upholding the highest ethical standards and delivering what it says on the tin every time. But delivering greater value for money to existing clients is not enough, when currently only a small percentage of the world's population participate in long-term investing. The industry needs to strive towards the democratization of investing to allow a much larger number of people to participate in the growth of capital markets. This will require the industry to work with governments and other stakeholders to engage and educate a much broader potential client base. Making sustainability the new standard for investing is critical, while offering near zero fee products will be important too. Sustainability should become the new standard for investing. Climate change will have a profound impact and will reshape global finance by driving a significant repricing of risks and assets. Additionally, events this year have shown the impact of a corporation on society is becoming equally important to investors and will be the yardstick by which organizations are judged. Asset managers need to deepen the integration of sustainability into the investment process, reducing ESG risk and increasing stewardship. Finally, the financials, the pressure to reduce the fees from many stakeholders will continue unabated. Whilst there is plenty left to do to optimize the asset management business, the longer-term answer will require a fundamental restructure of the entire value chain. In conclusion, delivering long-term value has never been more critical to the stakeholders of our industry. The world will get through this crisis and economies will recover. However, we need to ensure we don't squander this opportunity to elevate the purpose of the asset management industry, thereby delivering greater benefits to investors and society.